Good morning, everyone, and welcome to today's Trading European Open here at the live trade room. You're all very, very welcome indeed to join us. Apologies for the sort of slight delayed start, really. We've had some intermitting internet connection issues, so we've now got everything sorted out, we think. So hopefully we won't have any issues. So listen, let's get straight into today's trading session. If we can start, as we always do, with a risk warning, please do familiarise yourself with the risks involved in trading these financial markets. The details are there up on screen. And what we look to do when we trade these markets is to try and get an understanding, comprehensive understanding of risk of price action. What is price doing? What opportunities does it present for us? How do we go about executing a fairly consistent and detailed and disciplined approach to trading these financial markets? How do we then go about managing, and one of those topics, very, very important, is your ability to protect your capital and manage risk effectively. So we go through all these decision-making processes with one view, and that is to book in consistent returns. So without further ado then, let's just have a quick review of potential market moving news. So for this, we'll get up our trading platform, our news platform, which is Forex Factory. And as you can see, there's not an awful lot really that has the potential to impact the markets for the European trading session. So we do have some news events impacting the Canadian dollar and potentially the US dollar as well. And we do have crude oil inventories later on this afternoon. So we might look for opportunities in the crude oil market. Okay, so that aside, let's get up our trading platform and let's have a look and see what is going on. So let's take a little step back yesterday and see exactly what happened. We did see a little bit of softening coming in to the bullish euro-dollar trade yesterday around the 15.47, and we started to get the sell-off. Now, just to reiterate, we still, as things currently stand, we are still, certainly from a technical perspective, we're still long the US dollar in terms of a directional bias. Now, we need something significant to change for us to change our opinion on that. Now, we don't get emotionally attached. We don't really mind whether a market moves to the upside or to the downside. The direction in which it moves is not so important. We don't sort of have that emotional will and desire for the dollar to strengthen. It's just what we're seeing across the board from a technical perspective, and that's what guides us when we trade these financial markets. So look at the price action that we're currently seeing. We're currently in a downtrend, so that's why our bias is to the downside. And like I said, until something significant changes, and that for us would be a double bottom or some bullish bit of price action coming in to the candlestick patterns that we're seeing. So a structural failure, for example, would mean that the opportunity to actually have a bullish view would be a little bit more of a prudent position for us to take. Now, yesterday it ended up, we had a bit of a late day strength coming into the euro dollar. Not just that, but the dollar started to weaken quite considerably over the latter part of yesterday. And it's interesting to see what is happening in today's candlestick. I was very interested to see where the close of last night's candle would end up, and it is around the 15.65 level. Good morning, guys. Thanks obviously for joining us, and we'll see if we can identify some opportunities today. So what we're looking at technically over the last 5-6 days is a pullback off the low, and the low is the 1300 level. We're just seeing a straightforward pullback back to levels of resistance. Now, if we identify the 1547 or the 1550 level, 10, 15, 20 pips either side doesn't really present us with any significant change of thought. And this market yesterday pulled back off the highs and is now settling around yesterday's close. So we'll definitely go in and have a look at this market on a 15-minute time frame. What I'm going to do at this stage is to just mark the lows and the highs, and I hope you would agree, looking at this just visually, if we trade what we see and not necessarily what we think, we're in a sideways moving market. Certainly all of the Asian Open, you could see a little break to the downside. That's the first signal that we've seen a little bit of the potential for this market to move lower. So we could look to sell this consolidation. So that's what we'll be looking at in a little bit more detail. Really strong rejection. So what we want to see is price volume and momentum. Are we seeing that recently? Yes, we are. Are we seeing a break to the downside after a long period of consolidation? Yes, we are. Do we have exhaustion? Yes, we do. So it could be a decent trade for us to consistently look to trade. And that's really the key to generating consistent returns. If you get a setup like this on a normal basis, probably 70% of the time you'd probably be correct in seeing winning trades to the downside from a setup like this. Obviously there is that potential that, like yesterday, we saw a false breakout to the downside, and then it's sort of slowly grind higher, and then we got the explosive move above the level of consolidation. I'll just show you just quickly what we're talking about. Not quite as flat as what we've seen through the Asian Open, but we had a similar period of consolidation, failing to make new highs, bit of exhaustion, momentum to the downside. We're happy to get into this on a consistent basis, and as you can see, we got into it, and this market slowly grind higher. So it was just over 20 pip loss yesterday in that trade. Now what we're seeing and what we're looking at is the potential to sell the euro dollar at a much higher price. The benefit for that is if we get a winning trade, we're likely to see a little bit more of a move to the downside. So let me just clarify. We are going to look at potentially selling the euro dollar. We are at a price which is firmly supported with resistance, preventing hopefully these prices from pushing higher. So when we analyze and make sense of this market, what would we be looking to happen from here is actually for this price to soften a little bit. So let me just get up my pen briefly. We'll just spend a little bit more time on this particular dollar pair. So what we're seeing is a bounce off the lows, come back to a level of resistance, and we're looking for the next leg to the downside. So obviously, if we're now getting into these prices at a slightly higher price, we're likely to see a little bit of selling come into this market. And how does that impact the buyers? They'd start getting nervous. So then they'll start seeing, well, we've had a solid move. Should we start taking profit on this trade? And that has the potential to add more momentum to the downside. So we have to negotiate a couple of levels of potential support on the way down. But this is what we mean about looking to sell a selling candlestick. And this is effectively what we have as things stand. So we did mention a few times yesterday that maybe today might be the slightly better opportunity from a probability perspective, and we hope that that's the case. So we come back to the euro dollar. It's looking like we're extending lower. If we get in around the 15.60, we're going to get our trade size back together. So we're looking to get in around the 15.60 level. This is a 15-minute chart. We could place our stop loss just above the 15.69, potentially somewhere around here, if we do get that break lower. So it could be just a 10 pip stop loss on this trade, so we can keep it nice and tight, not expose too much of our capital, especially during these summer markets. And if the market works for us and starts creating structures at these lower prices, we'll just look to run with this market. And if I asked you to look at the daily time frame and said, well, what's the potential for this market to move lower? It's quite considerable. It's a significant move lower that we could see today. We could see this move lower. So that's certainly something we're going to be looking at. Just to put a question mark in the mind of those that are looking to buy this market, this price action does not necessarily look good. So we want to try and capitalize on that, and we can actually look to take the breakout, and we're so close to it now. Let's just go in at the smaller time frames. All we simply want to do is to see the close below the 1560. If we get a close on the minute candlestick and then we get continuation, we are good to sell this market. And this is the consistent confirmation that we look for as well when we trade. It's getting a bit of a bounce off this level now. That's why we want to wait for the actual close of the minute candlestick. So even if it does stretch lower below the 1560, we could ask ourselves, under what circumstances do we actually enter this market? And the reality is a close on the minute time frame. So as you can see, we're just getting a bit of a bounce off this level of support at 1560. No major surprise on that one. So what I might do just for a few minutes is just flick through some other charts. Similar sort of setup really here for the pound. So what we would like to see really is some dollar strength kicking in across the board. Again, fairly tight range here, and if we start seeing structural failures now to the downside, we might be able to get into numerous dollar strength related trades. Yes, the short-term momentum is, as you can see, to the upside, but without doubt the actual momentum in these markets is very much to the downside. So so our directional bias is to the downside. The market conditions are slightly bullish after a long period, or sorry, before a long period of consolidation. So that's the assessment of the market conditions. In terms of a probability, it's not quite the highest probability we can get, but it is a strong high probability trade, just because of the way that that these markets move and respect price action. Getting a little bounce off the 1560, that's fine. Let it do its thing, and we'll only look to get into this market if we get a break of this level. Okay, so that's on a 1 minute time frame. So we'll come back to that shortly. We're just pushing off these lows. So where are we at with other markets? A little bit of intraday trading for the Asian Open. So we're firmly within yesterday's highs and lows. Just messy price action really. We saw the yen weaken quite considerably yesterday, but this is messy as things stand. So we identified the dollar Swiss. If the dollar started to continue to weaken, then this is quite a high probability selling opportunity. So we can continue to look at this. If the dollar starts to weaken across the board, we could look at maybe selling this market. So I'll put in a level here at the low. Now we'd prefer to potentially get into the euro dollar below the 1560. So then in terms of trade identification, we either sell the euro Swiss or we look to sell the euro dollar. A trade to look at could be the euro Swiss. Let me just have a quick look at the euro Swiss quickly, just to see where we're at with that market. Okay, just pure indecision really, just to bounce back off the lows. A sell trade in this could be interesting. Let's have a look and see what it looks like. So we've just been experiencing some European strength. So there's this sort of downward grinding price action, which is, it's not great. It's not kind of what we'd like to see. So we are sort of in this downward pointing channel. We're looking at this market as a series of higher lows and higher highs. We just need to see a little bit more information. What we'd like to see is a bit of a sort of we want to see this kind of level of support stack up. We'd like to see an attempt to push higher that then fails. So we just might need to be a little bit patient with this market and see if we capitalize on a strong structural move, not this sort of slow grinding price action to the downside. Bearing in mind we've got these higher lows which could stack up for us, but if we get a structural break of these higher levels, so for example here, if this market broke beneath this level after attempting to push higher, that will be a strong sell trade. So we need to see something similar from that, because at the moment it's just looking sort of a little bit on the groggy side. Okay, I digress. So I'll just go back to the dollar Swiss. I'm just going to balance our views really. So we had a strong pullback off that level, and let's see if we get if this market reverses above the 1570 level. That's not great. We want to see continuation of this move lower. So it still needs to fit with our overall view. Dollar CAD, indecision, isn't it, at these levels of support here. So we could easily be seeing see this market move in either direction, so it doesn't necessarily give us the high probability trade we're looking for. Aussie dollar, again, this is a much better kind of setup. So we'll look at that, and that would certainly fit in with our dollar strength trade. So again, like the Euro Swiss, we're seeing a grinding price action lower. We kind of want this market to attempt to make a high, and then if we break below the 73.33, then that will be a really potentially strong opportunity to sell. So let's see if we get the price action conducive for us. A little bit of a rejection here in the New Zealand dollar, so maybe if this turns red, we might look for opportunities. Maybe even tomorrow as well, it might present us with some interesting opportunities to focus on. Yeah, the euro pound strengthening against the pound. As things stand, but not much strength really kicking in. As a result, we might prioritize the sale of the pound dollar marginally. Sorry, I'm flicking through the charts just to see how that euro dollar is performing. So we'll come back to that. We'll definitely come back to the New Zealand dollar. We do have better trades to focus on. Not really interested in buying or selling the euro pound, certainly today. So this was the pullback off the move that we've seen off these lows. What we do have is kind of a double bottom after a strong day yesterday. If we got a bit of selling coming in today, might give us a better opportunity than these little small bullish candlesticks, just because we could look to take the next leg to the downside, or at least these prices pushing back to these recent lows. Gold market, interesting, looking like it's interested in selling off the back of a pullback, and we did say that we would like this market to pull back a little bit further if possible to 1204, and now it's a judgment call. Now it's just assessing this price action and seeing whether we get that clear-cut opportunity or not. Let's zoom out on a lower time frame. You'd have to say messy really on a 15-minute time frame, a series of structural failures to the downside, followed by a series of structural failures to the upside, followed by a more recent structural failure to the downside. So let's kind of monitor these levels. Has the potential to run into a little bit of support at these current levels. So again, like a few of the other markets, we need to see the attempt fail to make a new high and then maybe look at trading the rollover. So yes, we'll identify it as a potential opportunity for the day, but we need to see the market perform the way in which we'd like to trade it. So that's kind of the key. Waiting for the market to come to us rather than us being very aggressive with summer markets. It's not the best of ideas. Moving on to the US oil, it's still threatening to push higher. As you can see, we do have resistance around the $67 level. Let's see how price behaves around that, but certainly right now it doesn't give us a fantastic opportunity. US oil, a little bit of a strong sell-off yesterday after a lot of positive sentiment about the S&P 500 making significant highs yesterday, and then a strong sell-off. So again, that choppy bit of price action prevails really. We're certainly have taken a bit of a standoffish approach to the global equities, probably since June, I'd say. Not necessarily a bad reason. Yes, they have grown higher, but they have obviously given us some real choppy intraday price action as well across the last couple of months. A really good example to explain that is the kind of price action that you can see on screen regarding the FTSE. This was the other market that we suggested looking to sell. So we might get an opportunity. Again, a little bit choppy. We've gapped lower. We've kind of pulled back to close the gap, but now we're extending lower once more. So when we look at a daily time frame, we do like the potential for this market to squeeze lower. Certainly if we're getting a little bit of bearish price action kick in to some of the US equity markets. We have the European stock 50 strengthening off the lows. The CAC is strengthening as well. So again, the only market that's sort of doing its own thing right now is the FTSE market. Again, that doesn't necessarily fill us with huge confidence, unfortunately. Okay, let's have a look at the Aussie. Yeah, the slow sort of grinding upward moving price action. Okay, we'll have a look at it today anyway and see. So 75.27, you could place a stop loss above the 75.52. So it could represent an opportunity for us. Again, from a high probability perspective, it's probably not fantastic, but let's keep a close eye on it. So we'll stick the FTSE market bottom right. We'll put the gold market top right. These are more markets that we're kind of going to monitor really. And then just regarding the dollar pairs, like the idea of the Aussie dollar, let's bring that further down. It's a 15-minute time frame. The dollar Swiss, we keep a close eye on this market as well. So we want to see this market break to 98.36 because they just represent, it would represent effectively a breakout trade to the downside. So we've already started the little roll to the downside, but again, we'd only be looking to trade dollar strength or dollar weakness. We wouldn't be looking to do both at the same time. I'll tell you what we'll do. We'll focus on the euro, the pound, and the Aussie, all potentially to the downside, and we'll make reference to the dollar Swiss as we go. So we just bounced back off this 1506, and then we're just procrastinating around these highs. What that does is it elongates obviously the period of consolidation, gives more traders more time to identify the breakout to the downside, and if we do get that breakout, we're just likely on a consistency basis to capitalize on a bit of more of an explosive move. So it's not a tragic thing that this market is not making a move lower just yet. $28.87, 15.60 in the euro, 28.87 in the pound. Yeah, and this level here, the 73.38 level. We've had a strong, slow grinding move lower back to levels of support. So really that should give us a bit of a push to the upside, really, from a technical perspective, hopefully creating a bit of a significant structure. And then if we got the flush lower, that would give us that high probability trade that we'd be looking for. So let's do a very quick recap then. So this is our trade plan for the day. We're looking to sell the euro dollar, we're looking to sell the pound dollar, we're looking to sell the Aussie dollar. Obviously that would imply a little bit of dollar strength. If we see these across the board, we might look for optimum opportunities in these markets. It has the potential, it's supported really from a bigger time frame perspective. So we have the significant moves over the last 5 or 6 days in these markets, pull back off the lows, and that's all they technically are, is pullbacks. They're not anything more structural than that, and what we're simply looking to do is to capitalize on the next move to the downside. So hopefully the hypothesis behind these trades is quite straightforward. We're identifying consolidation, and what we're doing when we think about these markets is, do we have a selling candlestick? Do we have price action moving back to previous levels of support, which become resistance, preventing prices pushing higher? Yes, we do. Do we have consolidation with clearly defined highs and lows? Yes, we do. And do we have, positive risk reward ratios to the downside? There's plenty scope to capitalize on some really good trades lower. Do we get support from other markets? Potentially we do, if we're talking about the euro, the pound, and the Aussie, if it's all stacking up like it's going to squeeze lower. And all of a sudden you're compiling a bit of a significant trade to the downside, because you've done all your analysis, you've put it all together, and then it's a case of the markets will move whenever they want to move, and it's a case of whether we capitalize on those moves or not after the analysis. So you want to get, when you trade these markets from an educational perspective, you want to get as many things supportive of your trade as possible. And this is where other indicators come in. This is where people use moving averages. They use a whole variety, oscillators, whatever indicator, fib levels, whatever indicator you could imagine using, all fit into this category where we say yes. Please do feel free to use indicators if that's what you prefer. Tasso and James, use more indicators, and it's absolutely fine, because all it's doing is adding extra reasons to take the trade. And if all of these things stack up, it gives you even more confidence in that trade. And that's ultimately what trading is all about. But I can't emphasize the importance of being consistent in your approach, and looking to take trades irrespective of whether they're winners and losers. If they're winners, we'll manage them effectively. We'll manage the structures as the price is moving in our favor. If they're losers, we've kept our risk relatively low. We're quite comfortable with the psychology of the risk we're taking in the trades. We don't fret about the next trade. It's from a psychological perspective, it's not really that useful for you to put all your eggs in one basket on the next trade, because it could very well be a loser. So how are you going to feel? How are you going to react if that's the case? And the problem we have is that so many traders, especially new and inexperienced traders, they put far too much importance on the next trade. But all we're simply looking to do is trade percentages. We're looking to trade probabilities. And if it stacks up, it should become a bit of a no-brainer trade to buy or sell, whatever the case may be. And that's what all profitable traders have in common. They have their methodology, and it also, of course, the strategy you adopt is very, very important, but it's the consistent application of that strategy, which for us is probably even more important, if that makes any sense at all. Okay, so we'll okay, let's look at these. So that's the news flow. So nothing of any major consequence as far as trading these news events. So that's just a little bit of sort of insight into our thinking from an educational perspective when we trade these markets. So a break below the 28.87 would constitute a really potentially a decent opportunity to take this market lower. We're getting very close to that, so I want to look at smaller term time frames, just see what's going on with these levels. We'll look at it in the 5-minute for now. The euro dollar is edging lower to the 1560 level. We'll keep a close eye on these. And then we'll show you the execution side of taking these trades, and the risk management and the psychology and the trade management as well. So it's not looking like we're getting the follow through that we would like. So what we're looking to do is to sell the euro dollar below the 1560. We're looking to sell, looks like we're getting close to that now, the pound dollar, structural failure to the downside as well, and then we want to look to sell the Aussie dollar below the 73.37. In addition to that, if we see some dollar strength, so we're just getting this move now, so let me switch across to the minute time frame. Okay, so we are now currently below the 28.87. Let's see the close below this level, and then we might look to get into this trade. So we can look to place our stop loss above the 28.96. So now let's get into that market. We had a really just I suppose a 1 or 2 pip explosion to the downside. So we want this market to pick up some momentum, pushing lower. So we're just going to place our stop loss just above this high, which means we are looking at a 13 pip stop loss in this trade. Not really willing, summer markets not really willing to give too much room to these markets for the time being. So 10 to 15 pips risk in a trade like this is absolutely fine. So we're currently in the pound dollar. If we get that move lower, we can then start to trade the structures. We're very close to the 1560 again. And we are interested in the gold market. It's just we're kind of looking to see if we get a bit of a bounce to the upside. We kind of want to see an attempt to push higher, which structurally fails. We can create the low, and then if we get a break below the ascending line and the structural failure, then it all stacks up for us to sell. Just for the time being, we'll monitor it, but we're not really interested in trading the gold market just yet. And really in two minds with regards to the FTSE 100. Yes, it might grind lower. In reality, it's not actually worth the monetary exposure effectively for the FTSE. So we're taking on board our capital, and it would actually be a slightly higher percentage of our capital than we would ideally like to do this, to sell this market, even though it might be a winner. The 75.51, we're not really seeing follow through across the other equity space, so for that reason then we are going to exercise a little bit of caution on the FTSE, although it is a viable trade, and a break below 75.27 and a stop loss just above the 75.51 would be the levels. Let's go down to the 5-minute chart in the Aussie, just see what's happening there. Just moving sideways. A strong flush lower might get us into this market as well. So we're potentially in the first of 3 markets. Might just need to be a little bit on the patient side. Hello Matt and Mark, good to have you join us here on our Facebook channel. Zinli, please advise what is the stop loss for the pound dollar. You missed that part, no problem at all. Sorry, I was just looking at the messages now. Right, the stop loss is just above this structural height, just sitting in here, Zinli. So we do have an exposure of 12 pips. So quite comfortable with that level of exposure. You see this has created a bit of a structure now. So if we do get a break beneath this low, we could bring our stop loss right down and take risk off that market, of most of the risk off that market. So that would become a decision that we'll make depending on the explosive move. If we get a really strong extension lower, then we'll obviously bring down that stop loss. And so for now, it's just a 12 pip stop loss just above this structural level in here. If I zoom out, that level is firmly below the level of support in here. Let me have a look at it on the 15-minute time frame. So you can see this low sitting in here. We are currently trading below that low, and we have our stop loss just above that high. So it kind of stacks up for us. That's the kind of level that we'd be consistently looking to trade. Probably 99 times out of 100. This is kind of the trade that we'd be looking for. Obviously, in more liquid markets, you might get more explosive moves and maybe make your profits within 5 minutes of trading it. Sometimes summer markets might be dribbly, might be slow, might be frustrating and annoying to trade. So be it. What you need to do is to trade consistently, and that's what we're really going to focus on. So yeah, 1 minute time frames in Lee, just this structural handle, and it's just a decent size away from our entry. So it's only a 12 pip stop loss in total. And now we look to trade the structure in this market, and I'll explain what we mean by that, because what we want to see is this kind of price action. If that happens, we're good to stay in it, and we'll let our winners run. Wherever that low will be what the market will determine. We won't be arbitrarily limiting our profits on any of these trades, as opposed to a market that moves lower and it creates a bit of a low, and then it pulls back as you would expect it, and it fails to make a new low, and then we might, even if we get in at this level here, really good entry, but we get this strong structural failure at that level, we might just look to book in just a small winner and not really expose that capital and wait for that entry once more. Now, there's a little bit of decision making involved in this, depending on the actual setup, but we could have really a strong sort of take profit approach. If we let that winner run, we could have a strong movement. If we don't quite get the price action that we're looking for, we're going to be looking to trade the structure, and that's kind of a significant part of our ability to be consistently profitable. So we'll let the market determine when the structural failure occurs. And you're going to get those days where you get into these markets, if we remain consistent at the levels that we do, and we get a really strong comprehensive run on the market. So which hopefully you become a lot more familiar the longer you're with us. We are all here to make money. So so far so good on that trade. We're going to keep a close eye still on the Aussie dollar below the 73.37 and the 15.60 in the euro dollar. And we're going to back off the gold and the FTSE for now, and just see if we get some good moves in these markets. Are you guys trading anything yourselves? Is there any markets that you like the look of? Do post them into your chat box. So we'd like the euro dollar to follow suit now. We've had the move in the pound dollar. If we get that supported with a little bit of a move below the structural level of the 1560 level, and then potentially later on if we get the move from the Aussie dollar, then it builds a dollar strength position, and a lot of those that are selling, that are buying the euro, the pound and the Aussie will start to get very, very nervous indeed. And what adds liquidity to this market is traders taking profit, identifying the pullbacks, maybe saying that, well, this pullback is now coming to an end, let's take profit on that trade. That all adds more momentum to the downside. And I suppose it's quite like surfing. You want to catch a wave and then you just want to roll with it. Yeah, I see, Mark, you're not trading anything at the moment. Yeah, we always cherry pick, but we're doing so even more at the moment. Sorry, let me turn this on. We're really sort of cranking up now for the September. Certainly, you'll start seeing all the liquidity levels improve as the traders start to come back. So you'll start seeing a little bit more aggression in these markets. There's definitely a lot of markets really stacking up from a price action perspective, and that's always quite interesting. Yeah, hi Mark. You've been away from the markets for a while due to your work. The market's been quite flat. We had a really strong move there from approximately April, May, up to probably middle June. We had some really fantastic moving markets. And yeah, we look at these markets now and we're still getting moves. Like last week, we're obviously away for 2 weeks there for the summer. Sometimes it's quite painful trading the markets in August. All the big players are away, so we're not really getting the momentum, and these markets are just a little bit more prone to manipulation as well. Now that will be coming to an end very, very shortly. So I would agree with you. Over the last 6 weeks, they have been a little bit on the flat side. We did get a strong dollar move about a week and a half ago, and in the gold market as well, really good strong flush lower, which is something we would like to think we would have traded, but apart from that, there hasn't really been an awful lot to work with. So yeah, those are the market conditions. Now we are entering a phase which is probably the most volatile period of the year. Let's say the September, it's earnings season. There's lots of geopolitical risks seem to be going off all over the place. If Trump is anything, he is volatile and unpredictable, and I mean, who knows what he's capable of doing. And he can do it all from his mobile phone, just on Twitter, which is probably even more worrying. Yeah, lots of risks. There's lots of geopolitical tensions with leaders of other countries, and the US seems to be picking fights with everyone who it possibly can. And some aspects of I think Trump's outlook doesn't necessarily make an awful lot of sense, but he's certainly sticking to his guns, and he's pushing things through, and he's clearly bullying certain individuals in certain capacities, and then he's not bullying others in any way, shape or form. So yeah, who knows? And I suppose this is another reason why we're strong advocates of trading the markets technically, is because we will never have access to the same information as those decision makers, and certainly titans of finance. We'll never be able to access the same quality information, trade the markets in the same fashion, with similar speed. So we're not on a level playing field. It's important to note that that's the case. But if you trade the markets technically, you can always find out the relevant information afterwards. And I'm just looking now at the pound. We're in the pound to the downside, so that's doing fine. Let's have a quick look, see if we can get into this is exactly what we want to see. But we want to see this market close below the 1560, which is exactly what we're getting now. Let's be patient and wait for it to close, and let's see if we get continuation. So the 66. So let's see if this market pushes lower, we'll look to sell at that point. Right, there we go. We're going to get into this market to the downside as well. 66, 67. So 1567 is our stop loss. So actually only an 8 pip stop loss in the euro dollar trade. Let's keep those stop losses nice and tight if we possibly can. And we still might have a trade coming up in the Aussie dollar. So currently in 2 entries. So this is the price action we want to see. Now what we hope that this breakout to the downside is not necessarily a false breakout, and that we do get some momentum and some continuation. And if the Aussie dollar follows suit as well, then we'll have a trilogy of dollar strength trades based on strong price action. And hopefully we're getting close to that now as things stand. So and I suppose there's a distinction to make as well from a psychological perspective, is that if you focus on structure and not necessarily focus on pip return or monetary return, if you just focus on what the market is doing and getting out when it's showing signs of reversal, and really focusing on the structure, that's when we say we look to let our winners run. That's what we look to do, whether it is a 20 pip winner or a 200 pip winner. Now we're getting this move lower as well, 0.1. And let's go into the minute time frame. So we want to just see again this market close below the 73.37. In fact, that is not. So if we get continuation beneath the low, we do have so if we break this low on a minute time frame, quite happy to sell this market as well. There we go. Let's get into that market. And straight away from a risk management perspective, we're getting in at the 73.35. We've got a quite 73, let's say 45. Let's just stick it above these highs just up here. And you'll see it's a 9 pip stop loss. So from a we've been able to cherry pick opportunities in these markets. Now what we want to do is focus on trading the structure, and hopefully we'll have some good running trades today. Plenty scope to the downside. If we look at the daily time frame, you know, we're getting a bit of selling come in here. We could easily retrace 50% of yesterday's move, which would give us some fantastic returns, not just on the euro dollar. Let's go back. Like from a psychological perspective, we don't know if these are going to be winners or losers, but we just want to stack the odds in our favor as best we can. So we're already experiencing a really good move, but you know what? We need to see the structure that gets created, and then we can make some decisions regarding. We're getting a nice strong move at this point. So what we'll do is we'll mitigate some risk on this trade straight away. The 28.88. We can take that much risk off the table really on this one. A five pip, but we're getting all the momentum that we'd like to see on a minute time frame. Matt, if you're still online, apologies, I can't quite remember, but was it yourself that was trading the euro dollar yesterday? Took a couple of trades on that. Do let me know if it was yourself. And so yesterday we took a 20 pip loss because we were attempting the similar kind of trades. The difference is now we're seeing a bit of dollar strength come in across the board, and whenever this market decides to turn around, we'll look to take profit at those levels and really trade the structure. Yeah, great, Matt. Okay, so you got stopped out on the first one. Yeah. So look, hopefully today we'll be able to get a little bit of payback on those markets. You see, the major difference between yesterday and today is yesterday we were selling a bullish candlestick, and today we're selling a bearish candlestick. And if you can fit that in as well, you know, and try to adopt that as a policy or an approach. Oh, great. So you got in at a much higher price. Fantastic. So the 1587. Yeah, I was looking at that last night myself. So you... so yeah, you clearly identified quite a strong sort of sell-off around these kinds of levels here. Fantastic. Like, the only concern is you obviously got in and then the market moved sideways for quite a long period of time, but that's absolutely fine. There's nothing wrong with that whatsoever. So really good trade, Matt. Well done. Because I suppose the important thing to take away from yesterday's trades is that the analysis is all fine. Would I take those same trades again? Yeah, I probably would, for all the reasons that we've discussed. And this is where consistency comes in, because on another day, if the markets reacted a little bit different, there could have been real significant winners. As it was, we took over a 20 pip loss, I think it was. That's part and parcel of trading the markets. We recognize and acknowledge the risks when we get in. This is kind of a part of the whole sort of trade management approach, and trading at percentages that are comfortable for you from a psychological perspective, and just trade price action. And yesterday the prices moved against us, and obviously we saw a little bit of strength come into the markets, and yeah, hopefully that keeps going now. And what you want to be doing, you want to be looking at this daily time frame and suggesting that we would really expect this market to continue lower. We don't know how much lower. It could really extend significantly. That doesn't really bother us to any great extent. If we get a 10 pip winner across the board, then so be it. Any winning trade is a great trade. It's worth keeping that in mind. And it's worth keeping that in mind. So we're getting a pullback off the lows. This is what we want to see. We want to see the structures be created. Even if this came back to the 1560 level, that's absolutely fine. If it found a little bit of resistance at these levels, that would confirm our move to the downside is likely to continue. So we just need to trade price action now. That's actually the nice part. The waiting and I suppose the anxieties of trying to get the entries can be quite significant. And then once you get those moves, the trade management side of things is a little bit easier. It's a little bit more straightforward. You just trade structures. You just trade the highs and the lows, and move price in accordance with that. And the only caveat to that is you effectively need to see, sometimes you need to see a little bit more before you make that decision. That's probably the best way to put it. And what I mean by that is, if this market, if the euro dollar attempts to make lower and it fails, then we need to make a decision. Is it worthwhile leaving our stop loss where it is, or should we look to cut that trade short sooner rather than later and look to get into it again? And that's where I suppose a little bit of experience kicks in. We can now monitor this low, and if the 1560 stacks up, we can bring the risk down, take the risk off the table. But we kind of want to see this level break, the 1553, and just trade the structure. And again, this is just practicing consistency in your approach. Like, we're not talking about a huge difference between the high and the low. We're talking about sort of 6 or 7 pips. So in this case, it's probably worth leaving our stop loss where it is and giving ourselves that extra little bit of room as things stand. So like we done in the you know, if we sold these lower levels, we'd be looking at this as a stop loss anyway. So that's why we just take risk off the table, give the market a little bit of room to develop and to continue to move lower. So this is what we're wanting to see. The good news is we've started to see the move across the board. That's exactly what we'd want to see. But now we need to break these new lows. These lows just sitting in here. And let's see if the market conforms with us or not. That's going to be the big driver. If it doesn't work today, it'll work tomorrow. If it doesn't work tomorrow, it'll work the day after. You know, and again, you guys will experience this, you know, over the medium and longer term. If we do strong structured analysis based on really strong principles, we can be consistent. Whatever reasons you want to give yourself for getting into a trade, whatever your approach is, as long as you're stacking the odds in your favor, you'll increase your confidence levels. You'll hopefully try and be advocates of discipline and looking to stack those odds in your favor. So whatever these reasons are, can vary from trader to trader, but you need to stack the odds in your favor as best you can. Do you have the risk reward? Do you have the overall setup? Are you trading a breakout of consolidation, which is effectively what we're doing with these 3 trades. So if you want to know what type of trade we're looking to take today, it's a breakout from potential levels of resistance. And that's what we're looking to trade. So that's what's important. And if you could be consistent in these, you'll make consistent returns. I suppose the major problem that traders have is that they can't be consistent in their approach to any great extent. Now, we're seeing a structural failure to the upside off these lows in the euro dollar, and we're getting close to similar bits of price action in the pound dollar and the Aussie dollar. The reasons why we're not going to be too aggressive with our stop loss in the euro dollar and the Aussie dollar is because we're so close to our entry. We kind of want to give this bit of price action a little bit of room. Our overall exposure is not excessive, so we want to see if these markets are just clearing out any traders that are using these highs, and will we see the next leg lower. So you would anticipate that that the likeliest outcome for these markets is that they're going to move lower, and we want to give ourselves every opportunity to try and capitalize on that. So let's see how we get on. I apologize, guys. I've just taken note of the time. We do have some traders joining us through the live trade room. So what I might need to do is to just end this particular recording. Please do jump on. For those of you that are from the live trade room, come and join us there. I'll be live now in just a few seconds. We'll leave these trades running as they are. Hopefully we'll have a profitable day today. And hopefully all of that makes sense. Those of you that are perhaps new to joining us, do see the link below in the description, and if you like our style and approach, we want to make trading education as affordable for you as possible. So very, very low price point. If you do want to join our live trade rooms every day, you could do so. Just look at the description below, and please do like and share this video as well. And subscribe to our channel, and you'll be informed as well of significant updates. Thanks very much, guys. We'll keep an eye on these trades now, and I'll be online in just a minute or two. And apologies, I've completely taken my eye off the time frame. So from everyone here, I'll just wrap this up super quick. You're very welcome to follow us again on our YouTube channel. Just subscribe, Facebook, Instagram, Twitter, and LinkedIn. And if you want to search for us on YouTube, it's at the Live Trade Room, all one word, and you'll be able to find us there. So thank you very much for joining us. Do take care. We'll have a really strong, profitable day today. So from everyone here at the Live Trade Room, take care and we'll speak soon. Bye for now.